Hi everybody, I want to get this information out as far and as wide as possible. It's very, very fundamental and is a huge game changer for anybody interested in having a lawful defence against paying income tax. You see, the nature of income and gain is not defined in any of the tax manuals that I have studied. So I've studied the UK tax manual, I've studied the United States tax manual, the Canadian tax manual, the Australian tax manual, the New Zealand tax manual, and I could carry on, but I thought those would be interesting to look at because many of our members are operating in those countries. And I cannot find any definition of income or gain. Well, what the tax manuals do is if you look up the definition of income, it says please refer to the definition of gain. And if you look up the definition of gain, it says please refer to the definition of income. And it literally goes round and round in circles. Now, let's unpack this because it is so significant and such a reveal of how the game of Monopoly is working. As you know, it is my belief and strongly supported by the evidence that I present on my webinars and in my technical papers that there is a living man-woman, there is a birth certificate construct, which is an artificial entity. I say the birth certificate construct is a person. It's actually confirmed in the Bills of Exchange Act of 1882. And that person as an entity, as an artificial entity, is a banker. So what is the reason why they would make the birth certificate a banker? Well, the reason is because they use the birth certificate, artificial entity, the person, to issue securities. So what are they? Well, securities are promises to pay in the future. So if the whole of the Monopoly Board of Commerce is operating on promises from the living men and women, from the signature of the living men and women, that indicates that everything on the Monopoly Board of Commerce is, and not only is it artificial, but it is all operating in a debt-based model because those promises to pay are effectively credit, and the credit is owed back to the living man or woman. So that is what I refer to as signature credit. The signature creates the credit. The issuer of the credit is the living man or woman, but without the body corporate, which is the birth certificate entity, the signature credit can't get onto the Monopoly Board. Now, if you look at world debt, and I mentioned this on numerous of my webinars, world debt only ever goes up. Now, the reason why it only ever goes up is because every time somebody tries to pay for something, which, by the way, is impossible because there's no money of substance, all they're doing is issuing a new negotiable instrument, a new security, a new promise to pay, and that goes on to the Monopoly Board of Commerce as a debt. So this is why world debt only ever increases. And if you want to verify this, type into your internet search bar the world debt clock. So when people are saying, I want to pay for something, there is actually no way of paying for anything. All you can do is transfer some more energy onto the Monopoly Board of Commerce through the artificial person, which is the banker, which is going to issue a security, and that security is going to discharge another debt. So one debt, the pre-existing debt, is going to be discharged by another debt, therefore increasing the amount of debt on the Monopoly Board of Commerce. Now, if you go one step further and say that everything on the Monopoly Board of Commerce is operating in Chapter 11 bankruptcy, which happened in 1933, you can no longer pay anything because of the bankruptcy. So if there is no income and if there is no gain, the next question is why don't they define income and gain in any tax manual? And that is very, very simple to comprehend. If there is no money of substance, then you can't pay for anything, and therefore there cannot be a definition of income that refers to payment. Because if there is no money of substance, there can be no payment, and therefore, and this is the big one, therefore there cannot be any lawful tax. And if you look into it in more detail, as I have done, and I've described it all in this document here, there is a jurisdictional pivot in 1933, which is when the money was used to be, prior to 1933, backed by physical assets. Gold was the majority, and that was replaced by the energy of the people. So what is going on here is those that run the Monopoly Board of Commerce, certainly on the money side, they use our energy. They use the energy of the living men and women. So it is conscious energy which is being used to finance the Monopoly Board of Commerce, and all of that consciousness energy is actually owed back to the living men and women who are the creators of the energy. That's where the energy originates from. So the whole system is a debt slavery consciousness. It's capturing consciousness on the Monopoly Board of Commerce. Now, tax experts all over the world are, writing papers. There are court cases. There's tax manuals. There's all sorts of court cases going on where taxpayers, that's the citizen, the person, the debtor entity, the artificial entity, is being sued in courtrooms by tax officers to pay taxes on something which, if they only argued or only presented a challenge to the tax office that they're battling with, that is probably suing them for outstanding taxes, if they were to challenge the tax collector, the tax office that is suing them for unpaid taxes, to prove that there is a definition of income or there is a definition of gain, because without that proof there can be no tax. That also has other implications. How can there be tax avoidance schemes or even tax evasion if there is no income or gain or tax? Because there can only be a tax if there is a definition of income or gain. So it's a very, very interesting subject, and it is a huge subject given that billions of taxes are being collected all around the world every year, and which appears to be the citizen is volunteering to pay taxes even though there is no lawful definition of income or gain. So the whole system is based on a presumption that the taxpayer is going to pay the taxes. Now, when people go into court and they argue all sorts of very sophisticated arguments about why they don't owe taxes, or the body corporate birth certificate construct doesn't owe taxes, they generally lose. But I've also looked into how many court cases have been presented where there is a challenge to the very definition of income or gain, and I can't find any. So this appears to be a massive opportunity to challenge the tax offices to prove that there is a definition of income or gain. If they can't prove that, there can be no tax. If they can't prove that there's income or gain or tax, there can be no challenges over tax avoidance schemes. It's massive. It's a huge, huge subject. And I'll be doing many webinars on this in the next few months and writing more technical documents. So let's imagine that somebody's got a tax case against them, against the body corporate living. The living man woman is the agent for, you remember I've talked about agency before, so let's go back to that because that is also significantly important. The law of agency. The living man woman is the agent for the birth certificate construct. So that is the artificial entity, the citizen, the person we've established from the Bills of Exchange Act 1882 that the person is a banker. So the living man woman is the agent for it, and because of that agency, that is the joinder, that is the tie between the two. The living man woman has to pay, not only is transferring his energy, her energy through the birth certificate construct, but when there is a lawsuit against the person, against the citizen, against this artificial birth certificate entity, that lawsuit has to be underwritten because the surety, which is the agent, is the living man woman. So that's how they've trapped us into always paying the consequences of lawsuits or any other kind of litigation against any kind of legal, any kind of system of legislation. It's all applying to the birth certificate construct, but underwritten by the agent, which is the living man woman. So when there is a tax case, the tax case is going to, if the tax office wins it, and invariably they do, they win against the citizen, and then the living man woman has to pay. And normally the living man woman has to go out through the birth certificate entity, earn more money, or go and cash in investments, or go and sell something, or if they can't do that, go into bankruptcy. Well, that's a very interesting subject as well, because how can anybody be made bankrupt if there is no actual money of substance? If there's no tax, nobody can be made bankrupt because of non-payment of tax. If there is no tax, because there is no gain, because there is no income, I think you're beginning to see the significance of this. Now, let's suppose that somebody was fighting a tax case and they want to use this as a presentment in their case. That would be the art of legal warfare, where they would argue with the tax office that there is no gain or income, and unless the tax office can prove it, then there can be no taxes. And simultaneously, they would be creating the signature credit recoupment process. They would be engaging in that. So they'd be setting up through our service a grantor trust, an international grantor trust that will operate as the nominee for them, the living man woman. It will file the 1099 OID tax filings through the professional tax filing license that we apply to this process. They will be correcting the record at the United States Treasury on all of those securities that they've issued from the age of majority, from 18 or 21. Bank payments, mortgages, loans, credit cards, all of that credit that they've put on the Monopoly Board of Commerce can be, the taxes that have been paid on that use of the credit can be recouped through the Clifford Protocol, through the signature credit recoupment process, perfectly lawfully. All it is doing is the taxes which are being paid to the United States Treasury by the ultimate holders of the credit, which is the investment banks. They pay taxes to the United States Treasury for using the credit energy, that's the living man or woman's credit energy, and those taxes are redirected through the 1099 OID nominee filing to correct the record, to redirect those taxes, which, by the way, is on average $200 billion a year being paid by the investment banks in taxes. That is the budget that we've all got available to us. If those taxes are redirected to the grantor trust, which has been established as the holder in due course, then that is the lawful way of recouping the credit energy. You can then use that credit energy in the Asset Fortress Protocol, because it will be transferred to the Asset Fortress Protocol, and then the Asset Fortress Protocol makes the members Asset Fortress Protocol makes a donation to the OSN nation, which is the foundation that I've established to finance the independent nation. That donation is made to the ROS Ecclesia Trust, which is a ministry. There's no taxes to pay on that. It is to advance the nation, all of the independent infrastructure of power, of water, of communications, of travel, of health, all of those independent infrastructures that our members want to access. Up to 500,000 members that become envoys of the Republic of 𝐂𝐥𝐢𝐧. That's how we finance our nation. So imagine how much tax is being paid in the world. If there's $200 billion being paid in the United States by the investment banks, think of how much tax is being paid. These taxes that people are paying are unlawful. If there's no definition of income, if there's no definition of gain, there can be no tax. Anybody who's facing a tax case could use the art of legal warfare to challenge the tax office to prove that there is a definition of income or gain. They can't prove it. The tax should go away. But even if the case were to lose, the person facing that tax liability can recoup their signature credit from the age of majority, which would give their international trust more than the tax bill, the tax liability, to discharge it. And then here's the good part. Even if the lawsuit loses, the recoupment of signature credit can discharge the tax liability if the case loses, and then that discharge of the taxes can be recouped as additional signature credit in the next tax filing period. So you cannot lose if you are facing a bill of some sort. It's all explained in this paper. I will be doing more and more webinars on this. It's such a massive problem. This section here is telling you how much taxes is being paid by the investment banks. That's the taxes on our energy. And this document explains it all. It's one of the highest read documents in our Telegram channel. So I know a lot of people are very, very interested in it. Watch out for the webinars. Watch out for the tax protocols that I'll be providing my technical papers on. And if you are in a position where you're fighting a tax liability, there will be a protocol for you being made available via the Republic of 𝐂𝐥𝐢𝐧 very soon.